Welcome to Charts from the Media. Today is February 9th, 2014. We will be looking at XLF. It is a financial sector spider. We'll take an investor's view, not a day trader's view. The video will be going over more of an intermediate to longer term perspective. When you look at XLF, the top 5 holdings make up 37% of the portfolio. The top holding is Wells Fargo, which has gone up 31% in the past year. And the 4th top holding is Bank of America, up 42% in the past year. Now, over the past 2 years, XLF has doubled. So the charts that we're going to take a look at are the weekly, looking at the Fibonacci and support levels, the daily, looking at recent price action, oscillators, and Fibonacci levels, and then finally the pointed figure with the target. Here we'll be looking at a weekly 2-year chart. Going back to the end of 2011, XLF has doubled since then. Now, if you look at the big picture, typically financial stocks do not do well when interest rates are rising. So when we had that interest rate bump up last May, June, you'll see that we had a little bit of a pullback there. Now, the interest rates have been coming down again, and we've had this nice run up. Interest rates are still down, and we've had a pullback in the stock market. What I would be anticipating or looking for is when the interest rates start going back up and the market is not making new highs, I would actually be expecting this level at the 2050 to break and then be looking at the lower Fibonacci levels. So it recently tested a support area, and then where the trend lines cross that 2050 level, that's what I would be looking for. The Fibonacci retracement levels, the first one's down here at 1772, so that would be a pullback area for support of the first time. Now, if it goes ahead and makes a higher high, then you would have to reevaluate the chart and draw different trend lines and Fibonacci levels. Now, with the 3 lines near the same place, that would be considered a pretty strong support area. Looking at the daily chart, you have a strong decline in the past 2 weeks. It became oversold and indicated a reversal. So we had lower prices and higher lows on the oscillator. So we were expecting a bounce, and that's exactly what happened. Now, if the retracement does not continue, or if not able to make a higher high, then watch for that break of 2050 and lower levels can be seen. That's where you're going to go back to the weekly chart. And then notice where it has retraced to. It's retraced to the 50% Fibonacci level from that down move. So this is now going to be acting as a resistance level, and then right above that you'd have that 50-day moving average. So you're going to have resistance right here between that 2130, 2150 area, and then again down at 2050 would be your support. The point figure broke out from its previous high. It gives us a bullish price objective of 24, so a little bit more room on the upside. But if you look back here, this was a high as well, right at that same level. So if we get a higher high, that 24, you'd be looking at that could be a potential resistance area. All in all, this would be one to watch throughout the year, especially if interest rates start rising, and if we have a little bit of volatility in the stock market, I would expect some pullback of this XLF. Thanks for watching. Visit chartsfromthemedia.com for definitions, learning tools, videos, and more.